All right, happy Thursday, everybody. Let's get right to it. A lot to get to today. Another eventful week. Just take a quick peek. Really, Nasdaq down 356. S&P down 67. And Dow down 425, 415, no, 446. Sorry. We see crude up only 56. Gold's up 11 bucks. And we've seen quite a bit of action since Tuesday. What's going on, chat? Want to just let everybody know in a few moments we're going to be joined by Mitch Ray, the one and only Mitch Ray. Will be here today. Kind of like it. Mitch and I do these double shot Thursdays. And I'll probably I will jump over tonight to continue the urgent discussion, urgent conversation we all need to have, folks. We all need to have really to assess what are the possibilities, what are we looking at, what should we be afraid of, what should we not be afraid of, and actually just start anticipating what's going to happen here with a stronger sense of a heightened environment that is the malaise. The malaise. The malaise. I've been saying it for a while, and I've been really kind of pounding the table on this malaise concept that almost the antithesis of last year and maybe the last decade. Things have changed, and we've seen so many remarkable moves, commodities, stock market rolling over in ways we haven't seen in a long time, and then the unspeakable agricultural commodity sector, which is it's going to hit us. It's going to come. So, and I think the equities are going to probably be the last one to really express this, although we're seeing it today. As I said, Nasdaq back down after yesterday's move, folks. The Dow was up 800. Now we're right back down. 400, 500. Those are bear market moves. That's those kind of corrective whipsaw extreme upside, especially the extreme upside move. Sometimes when it's too much to the upside, it's not a good thing. And right back down today, Nasdaq. I do want to jump to before we get into that. And again, we've got Mitch Ray here today. He'll be here in a few moments. And let me take care of some business for what I need to do. Again, everything that we do, folks, is on harmonictrader.com. So please jump there, become a basic member, go to the basic member resource page. And what a lot of people are now asking me is, how can I get with the larger MetaTrader, eSignal, NinjaTrader, or Sierra Chart program? Most people already bought, or at least have gotten the trial for our TradingView product. And if you have not, please send your email email us with your username, and we'll set you up for a 2-week trial. But the MetaTrader or eSignal, NinjaTrader, Sierra Chart options are all really phenomenal trading tools. So I want to just kind of point everyone's, point you in the direction there, because I don't think I'm explaining this enough. Every session when I do this highlight, I get more questions. So let me kind of walk through this really quick. Get the books. That is also something people are asking me. What books are the best to start with? There's 4 books. That's a lot of information. I would say go with volume 3 if you have experience with trading. If you're a total newbie, start with volume 1. Then jump in with the webinars and go over to the Discord group. And that's where Mitch is, and we're going to jump with Mitch here in a minute, but go there and become a part of that harmonic pattern group. And then take your time. Learn what we do, learn the framework. It's absolutely essential because the framework continues to play out over and over again. And I want to go right to gold and crude oil. And then we're obviously going to jump into the crypto here in a moment, because what was that move in Bitcoin? Really quick, because this is so important for tomorrow's close and really what we're seeing across the board in harmonic action, is this massive deep crab had a terminal bar at 2788, but the 1618 move from the last throwdown, this last corrective move, was at 2068.30. Vicious reaction off of that. Now, I want everyone to understand that this is really typical of deep crabs, of all crab structures. Not surprised to see kind of a whipsaw 1618. We're seeing a few immediate reactions at big daily, weekly numbers. If it's the crude oil market at the all-time 886, or if it's gold sitting at this, not only this daily 1618, but gold is, there you go, gold's hitting the all-time 886 as well. And it's a weekly crab as well. I only think we will pause here. And I said this before because of the indicators being so explosive on this move. We could probably, look, I wouldn't be surprised in some kind of quick flash move if you did a strong reaction, hit 1925, and then started to rally. That's where I think the larger breakout move will occur. Other than that, nothing's really changed with this commodity backdrop. Agricultural commodities, gold, precious metals, crude oil. So quickly, crude oil. 125 was the number, is the number. It still is the number. The all-time high to low. There you go. Let me go to the monthly chart. This has been our larger target since really 80 bucks. But it is remarkable how this was rejected this week. Like that. And there you go. Let me bring up the 886. We don't even consider this complete until Friday. So we'll wait, see what happens by Friday's close. And again, above 125 is going to be the big continuation level going forward. Take a look at what happened when we got up there as well for crude oil. Still expanding in the overbought on a monthly basis. So this still, you've taken out multi-year highs. You're trying to challenge the prior extreme amplified RSI. So let's see how this shapes up going into Friday and actually next week. But 125 at that 886 could be a pause number for now. We think of it this way. If a larger breakout, all-time breakout, is going to happen on crude oil, which we've seen in the individual contract markets, we've seen it in many commodity markets, I wouldn't be surprised to see a little pause here at the 886. Try to give you some kind of crab formation and then go. And that would be maybe in the most bearish of cases. This is a situation where you've hit that 886 incredibly strong, but we're still not officially in a terminal bar yet. I don't know. How's the audio, folks? Are we okay? Hey, Stephanie, let me know. Let me check. It looks like it's good on my end. Appreciate it. Let me know. Any problems? In a minute, we're going to have Mitch Ray join us. Let me just kind of give him a quick note. He's here. There he is. 1 minute. I'll be calling you. 1 minute. Get him back in here. So just be aware of all these big numbers, folks. It's not like we have divergence or major confirmation in any regard. Not too concerned. Really quick, here's the risk disclaimer before we go any further. Understand that this show, the Harmonic Pattern Podcast, is for entertainment purposes. This is not financial advice, but I hope you find it educational. Today's March 10th. It's Thursday. We're here Monday, Tuesday, Thursday around 11:30. Subscribe to the channel and you'll get that note. So let me dial Mitch in. 1 moment.
Hello. Hey.
Okay, let me bring you in now. Mitch Ray, everybody. He is here in the house. Thanks, Mitch, for joining us today.
Hello. Good morning,
Give you a little more
everyone.
boost to
To
the
you as well.
levels.
Yeah, we good?
Looking good.
Sweet. Well, yeah. What an interesting thing to wake up to. But let's be real, the Bitcoin crashing last night was kind of a random time. It doesn't really, there's not much price action that goes on, our time around like, 10 to 11, PM, but certainly happened last night and it's been selling off until this morning, and we got some some bids and it just, pulled back and here we are, kind of completely squared up from that pump we saw yesterday. And I'll say not really feeling too good about the hopefully things change. And you're not in trouble, right, on Bitcoin until you make a lower low than your 37.3 area, but yeah, just if you look at the daily on Bitcoin, it's rejecting what was once resistance in January 2021 as resistance again. So hopefully we don't bearishly engulf here. That would be terrible. But yeah, other than that, I'm good. Life's good, man. It's good to be back here. It's always fun when we do these things. So yeah,
Absolutely, it's been a little crazy with everything going on. I think it's amazing how we jumped from COVID to the other geopolitical event of the day.
oh, well, we had 2 years, man. Prosperity. It was amazing. God, 2 years just the trends became like once the volatility subsided, the uptrends became apparent again, and the bullish patterns were just easily identifiable, they were reliable, and they outperformed. And now we're just in a different world. There's things, like you said early at the beginning of the stream, things have changed. The dynamic has certainly changed on equities market, as you can see today. Like, right? Just, immediately NASDAQ futures showing hidden bearish divergence on the 4 hour at the pattern completion zone of a bearish 5-0 and just already starting to sell off that. Um,
We have a number of
that's
patterns on even. This is something we're going to see actually, where we have patterns everywhere. We have patterns on daily, but then we're getting a lot of patterns on 4 hour, 60-minute. There's a lot of these patterns on the Nasdaq and S&P where they did a reaction, the rally off of last week's lows. That you had a lot of patterns there. I mean, Dow, I'm flashing right now,
your shark, yeah.
and then beautiful shark, but it's only a type 1 reaction.
Yep.
This one came right up to a 5-0
It's
with
almost like it type 2'd, right? A little bit of the 5-0,
it it,
almost one,
it
two.
did it you could say that it did because of uh, this first thrust down, and this was just what, yesterday? Yeah, yesterday early. It was that big thrust down,
Yeah. Yep.
right back up with 700-800 points, and you can't get through it. So this is
Volatile, man.
yeah, this is where you put the patterns together, and then you see this rollover, and you say, okay, that kind of a move which cannot break out or continue in this environment needs to retest that pattern. Still down, still down until we go back and retest 32, 32 400 at a minimum on the Dow. So trading 32 840 or so. I just think all of this is going to take more time, and time is not working to the long side's advantage at the moment.
No way. Yeah. Like the bots, you can tell like the algorithms and bots are the other way. They're not auto buy, buy the dips. They're fading the rips, right? All that's going on are lower highs, lower lows consecutively over time. And anytime you show hidden bearish divergence, yeah, reliability and outperformance. And this is just like makes me think about your book, where you talked about, dude, just that. Yeah, like if y'all haven't read his books, I can't remember which volume it's in. It might be three or two, but yeah, when the tech bubble popped on the Nasdaq, and you'd be pinning harmonics, and you'd just be looking to see if they would be violated, if they would just roll over. And I think you've already seen that on the Nasdaq, a couple places. Um, let's see. Let me go to the IX. I see. Yeah, there was one time where it was so weak I didn't even start painting it because I'm like, I just don't. Like, yeah, it was literally like you could have gone X January 24th, um, and tried to paint an M shape, and it would have on the 22nd, it should have like stopped at the 886, but it just kept going. It went to its lowest low of the year, the lowest low of the downtrend. Just complete immediate violation of like an M shape. And I think you've done that several times on the way down. So yeah, I don't
Ge-
really.
And you are getting reactions off of these major retracements. Things that are 2 3 week 886 retracements give you a little bounce, but then no continuation. That was yesterday. Here's Nasdaq on a 4 hour, right to the 886. That was 13,181 from the
Perfect. Yep.
February late February low, early run, type 1 reaction. And again, I would you have to come back down, retest those lows before you would even think that that's a major pattern. And we're not doing much here to even show that it's has that much strength behind it. I just am really getting more into that side of things where the fact that these things pop and roll is telling you more about the trend at hand, that it's getting weaker.
It's unfortunate, but the good news is like I don't know. This has kind of been telegraphed. I mean, the lower highs like that. I think like you was really able to start seeing the weakness in the market when you attempted a rally December 8th, and then you like attempted the rally again December 29th, and that was it. That was like confirmation of distribution on a major index fund, and then you started rolling over, and then you made the lowest low of the little pullback, in January 10th, and then you rallied again. You made a substantially lower high, and then another rollover. That's it. I mean, that's underlying weakness in an index fund is what you need to know, and it was doing that on all the index funds too. And Europe was front running all this. Europe was already like breaking supports of these massive consolidation structures that had been kind of in development. I don't know, since July last year. Like all these right angled ascending broadening formations, ascending broadening wedges, diamond tops. There were so many different ones, very diverse looking structures all over Europe. So, but I mean, like the Dow Jones looked identical almost to the German 30, but the German 30 outperformed because they're screwed. I mean, like I think 70% of their energy consumption comes from Russia. So I just don't know how they're going to be pulling out of this anytime soon. So,
Take a look at the German iShares here. I'm going to pull that up in a second and go monthly. You could say there's a triple top up there on that last run up to 35, 36. And even if you're looking for an opportunity on Germany, again, the
what's
fact
the
that
ticker on the one you're looking at, or
EW
you're about?
EWG,
Oh, EWG.
yeah, that's the German ETF.
Oh,
I forget how many of the top German companies are in there. If it's the DAX or mimics the DAX, pretty much.
uh,
You're down here 26 and change.
interesting.
You're down like 30 plus percent.
All that
Um,
distribution was beautiful. It's different than the DAX or the German 30, like the futures or whatever. It was showing
see
just so much
iShares.
distribution. It was like four, five falling peaks. My God.
Yeah,
God, that reversal was beautiful, right? Hitting the same high from January 2018, and that was it. Up thrusted through it. Dang.
there's a lot here too. The fact that it could not break out on that last run, massive multi-decade highs, double, triple top. Again on 36, not good. This thing is the monthly closes on everything in about 2 weeks or so. 2 weeks from Friday, or actually 2 weeks from next Wednesday, gonna tell us how severe. But a lot of this stuff, it not only has it hit short-term signals, triggers, but these failed a lot of long-term resistance points, and then rolling over now, or uh, easily taking out every month, every week prior lows. But this gets back to the whole argument of looking at everything relative to the COVID low and then just saying, okay, what's going to do a full reset?
618.
Yeah, you're sitting
Yeah,
right
he's
at
great.
the 618 there. But we know what happens if this doesn't stabilize. This continues
Ugh.
to slide.
Yeah, 2255 next target, but
Mm-hmm.
that's not a very strong support. I don't know. I mean, what is considered strong support on this? Yeah, that's just nasty. I mean, that's just think about owning the EWG, like you say you just bought somewhere, on the way down in the crash, the global financial crisis, and you own it now. It's like you haven't made any money. I mean, it's just terrible. And I think that I saw a graphic on that. If you did not participate in U.S. stocks, you haven't recovered from the global financial crisis. This chart is indicative of that graphic I saw. So yeah, yeah, this just you can't make money being long holding outside of U.S. equities. Just doesn't work.
Yeah, and that's again more a function of debt expansion than anything else. Easy money to float valuations. But this is something else where we look at every last swing. It's very cyclical. I mean, you'll see cyclicality here all over the place, but every retracement in this multi-decade cycle is pegged for minimum 618, but mostly 786 or close to full 886 retracements before the next leg, if or even the next leg they can manufacture, materializes. So this is still
Yeah,
coming.
demand line right there. Yep, that would be like it's $22 if it is going to go back to test that.
Yeah, and there's your trend. I mean, long term.
Yeah, but if you anchor just a trend line from March 2003 and the global financial crisis low, it gives you a demand line. You can see that the COVID crash, you fell below it, and you just sprung back above it. You might go down to back test the spring, and that'd be really interesting price action correlated to that trend line.
Yeah, I agree. Again, lining back up with a relevant point of this COVID low, COVID cycle, which is really what it is. This is just a manufactured cycle of that had no follow through. That there's real no growth. I look at that and say there's no growth. There was really no growth that would take this to new all time highs, or even say a 1618 expansion. This just
Hmm.
went back to the prior cyclical limit, rolled over.
God,
Perfect
couldn't even
H,
make all-time highs.
yeah, perfect HSI on the monthly. That confirmation, I see stuff like that where, yikes. I mean, that relates this pink arrow. Oh, I got to get the indicator in there, but um, a lot of signals here. Amplified RSI, that's this blue indicator. It's just hitting oversold now, so depending on where that wraps up for the month, I wouldn't expect that to turn around for at least two or three more bars. Get the HSI here. There you go. There's HSI, and that's hitting the oversold now. So it's let's see how this shapes up going into month's end, and then the follow through into next month. Uh, I just a failure of these lows, or even a standard just continuation. Every month you break the prior month's low, you have to assume that it's just a higher probability of gunning for this full reset back down, you know, 22. I think 22, another 15% lower. It's not really just saying there's not, you don't have anything here to even suggest that you're close to a low. Should
Yeah, I think it's just the beginning. It just started, and you'll catch a relief rally because the selling was so bad. Yeah, and you Yeah, bots and people have limit buys set up at that 2015 peak that it bounced off of from way back. Whatever. Sure, but this is not going to be like your COVID crash. This is going to be more grindy, like your 2008. I'm not saying we're going into a recession, but I mean, what ingredients are needed for a recession? I mean, I get it, like GDP uh, growth slowing for consecutive quarters. I think that's well, based on the fact that we know that like Germany, their central bank said that they've lowered their guidance from 3% GDP 2022 outlook to 1.9%. That tells you all you need to know. That's in line for what maybe could be considered a recession, right? When you lose 33% of your economic output guidance, right?
I think so. I think even I don't think anyone would disagree to say that we're in the midst of some kind of pullback correction on a macro scale. And then you apply metrics and say, from a harmonic basis or any kind of measurement basis of some type of corrective move, how would you measure that? What are the possibilities? And I think for a lot of the major indices that haven't gotten there yet, you just target, say, 382 pullbacks. For the Dow, that's down at just under 30,000, 29.7, 297 on the ETF. On the German, we're still looking at Germany. If that's doesn't have any bullish signals and then takes out the current lows of the month and just keeps going lower into next month, well, then we just target these larger 886 retracements. It's just not, it will take time, but you don't have, certainly, again, we're at the antithesis environment from a year ago. Easy money, fun time, crypto, let's go to Bitcoin conference, and
Oh yeah.
everybody's happy mood. That's next year, come April for the next Bitcoin conference. It'll be a slightly different perspective, I think. And markets can do that, and they get into something I've been saying again, this whole malaise idea of that markets can get into a funk, and they do these garbage price action moves like we've seen in Bitcoin. Again, I'm showing the diamonds, but the diamonds have slowly and steadily broken down, doing a week over week lower lows, lower highs. Same thing Bitcoin was doing up at 62,000, and looking for opportunities, but it just keeps going lower. That's not where, not anything that really entices you to say, hey, I want to be looking for opportunities or more opportunities when things like this, like Bitcoin, get slammed in your face last night. Um, and so Bitcoin, folks, this thing's
The
on.
uncertainty is back. I mean, just, we were the same price we were, you know, 24 hours ago, I guess, or maybe like 36 hours ago, whatever, before the pump. But not certainly putting in a lower high and a rejection at 42K on the daily. Terrible. But at least on the other side, you haven't taken out the previous lows of 37.7, 37.5 yet. Yet. That 3 day though, is the only thing that makes me feel like kind of okay about Bitcoin still. The 3 day chart on Bitcoin with that 203 day moving or 203 day moving average, where you're above that still barely, and you're skating along it. And I mean, like on the 3 day, that closes in 6 hours 47 minutes. You could try to engulf. You could be trying to show an inverted hammer reversal, but what's kind of concerning is the fact that it's just testing that January 7th, 2021 high as resistance. That's all it's doing. And we were breaking that. I mean, it was so promising at the peak around 42.5, but I gave up all those gains. And I could think it probably has to do with weakness of the index funds, but same time, the index funds aren't down almost 7% today. So it was just kind of, I don't know. I think you were just so exhausted, like on the 60 minute. Like, you had quadruple bullish divergence on Bitcoin at a support, the 37 area, and then you had hidden bullish divergence on the 4 hour. It was just like overdue for a pump, and the pump happened, and it was very short lived, and now we're just back, completely squared up.
One thought I have is something I've been talking about since really the end of February, where we did have off of the last corrective move down, had a deep crab pattern that completed in here, was kind of sloppy, but the general levels 36 and change, between 36 and 38, your own life support underneath there. And
Yeah, for sure.
was nice to get, we got that reaction. Again, that was up to a target two for how we look at that, which is not uncommon. The other kind of development that is here, we've had a number of back to back patterns, and we have this large bat pattern from the beginning of February that's got a big 886 XA level around 45, 465, and we didn't hit it on that thrust from early beginning of the month. But I was still feeling okay about this because even if we came back, and I said this on Monday, Tuesday on my podcast, that 36.8, sorry, that 38.2 was to be expected and would serve as, say, the retest off of this crab pattern. Again, I really thought this was a breakout and still can be, but I will be wrong. A failure under this prior low, and I will say that from kind of an update from what I was saying on Tuesday that um, I'm prepared to say I'm wrong and throw the entire towel in for now on a breakdown under these levels because you're running out of time. I'm okay if this is an extended consolidation phase, especially since we have this 4 hour pattern. That's we've seen that, but I need to see something trigger. And on this, if this is just a nominal retest, well, I want to see HSI develop. We do have an oversold, but it hasn't registered yet. Maybe by tonight. And some of my RSI, amplified RSI, is not in the best position yet either. So I would just say continue to tighten stops on your short-term levels become increasingly important for the entire long-term deal of what's possible. Because I think you fail here or you continue to go sideways and you do not at least show some progress, then some of the larger patterns we have talked about, the 30,000 level minimum, is going to have to get scraped again. So,
Yeah. Yep. Yeah, you got to eventually get back above 42K. Otherwise, yeah, it's just getting real rough. But at the same time, yeah, you're gonna have to take out your previous lows too. So you kind of just, I mean, there's a sell wall certainly at 44K, and there's still higher lows. You could draw a demand line from your January 22nd low and your February 24th low, right? You could anchor, and there's a demand line there, so you could start thinking you're certainly consolidating for most of the year now since we broke support January 19th. After you hit that bottom, just consolidation, and it's not bad. Yeah, I feel crazy. Like, it's the M shape, it's in the uptrend, it's making the confirmation lows, it's above that 3 day 200 simple moving average and staying above it even right now. And why is there not enough demand? There just must be too much supply at 42K still. There's way too much supply.
I have to entertain one obvious M situation, M formation, if it does not hold, which is I think a lot of people are already onto this, that what if it does this, where XAB, a B point, almost at an 886, about 85%, okay, deep crab land. Here's something the C point's at about a 95, and I'll get to that in a minute. But the B point at the 886 sets up for a minimum 1618. But we know the deep crab likes to overshoot, and the other number we use in the deep crab as a compliment, just if you haven't seen this before, just throw it on as a compliment. But the 1902, that would be our maximum level. But that gives you this range of somewhere in the 24 it, on this breakdown that could take shape, connecting the dots. And I do say that the failure on this C point, we're going to see how critical that 45.3 level is. I still think we could come back, retest it 45.5. I said that yesterday. I'll be ready to say I'm wrong on that if we do further breakdown. But I want to watch what happens here, because that C point failing the prior A is critical. This is something with all the M and W's that I don't know if people have seen this before, but your C point can tell you a great deal, especially with those crab patterns. If your C point's like a 886 or even higher,
Distribution,
yeah, it actually ends up being one.
confirmation of distribution.
Yeah, and this but in a weird way. I mean, one of the things the way I read this is that when you do get these crab patterns and they do roll over, because the C point was at an 886 and it failed the A real close, is one of the reasons why you get that larger breakdown. I think people would look at that and say, oh, maybe that's a double top, pretty stiff resistance, and could lead to a larger breakdown. I'm not saying that always happens, but let's see if I can find an example.
Yeah, it's like your prevailing trend currently in the midterm is bearish, and then you've got a bearish potential double top, right? But it's like a lower high double top, so it's even worse.
Yeah,
Confirmation, yeah, just
we had that on this crab. Uh,
and
Actually,
Ethereum was already setting up for that. That idea was already a valid one. The same one you're painting now, it was already an idea like on Ethereum, but like Bitcoin had not even was still you couldn't quite say it yet. Um, but yeah, just Bitcoin's stronger than Ethereum, but Ethereum's showing this underlying weakness that's really not good. I don't know. It's just been terrible.
well, here's something that hasn't been too terrible, which is, well, not yet. Bite my tongue, but Luna, folks,
Hmm. Yeah,
this,
insane. Hit all time highs again to this morning.
yep. So I've been talking about this since the Gartley down around 50. There were a few things we were looking at back in February on this. So this is hopeful. I mean, this is something where it's a sizable market cap, beautiful Gartley. This is what I would hope for most of these massive patterns that we're seeing. This is something I would think we would see in XRP off the weekly. That kind of a sizable move.
Yeah, yeah. God, man, it's just like I think like the stage is so set, like the same stage that's been identified in previous times. And guess what? There's fear. People are scared, and but then they pivot, they rally, and then over the next 3 to 5 months, they go insane and hit buying climaxes, and then completely roll over again, right? And they crash, and then we start over, maybe with a higher low. But yeah, we're at that point on a lot of these coins, so it reminds me so much, a little bit, I guess, not completely, but like of September of 2020 when we went through that little pullback on the stock market. All the altcoins were creating their M shapes, and they were just showing all kinds of accumulation. Kind of just reminds me of Ethereum and Bitcoin at their PCZs of their major M shapes, where X is like July of last year. So I mean, of course, Luna though is a different league. It created this M shape and then another M shape February 18th, and then you blast it off. And the 3 day, it's about to confirm its highest 3 day candle close ever, a massive bullish engulfing candle, and it's in a close above $100 for the first time, literally ever. It's never had a 3 day candle close above 100,
Uh,
nor a daily. Daily's never done that either. Wow.
yeah, I think it's absolutely powerful. That's a powerful pattern where looking on the weekly, take a look here quickly, is massive engulfings with super strong close. So any close above 102, 103, then Luna takes on the possibility of not only a 1618, which I think
Mhm.
is not a stretch on Luna with this kind of action
140.
preceding it. Yeah, 1618, yeah, 142, maybe even like a 1902, 160 area, 140, 160. Let's call it 150.
2618's 200.
Yeah, and then you do have this ABCD formation
Oh God, yeah.
all
Well,
all time.
we yeah, Bitcoin, Ethereum had their own too, didn't they?
Yeah, definitely. And I think this is kind of a special harmonic breakout situation where you can target 1618 with it. Your C point was almost a perfect 618 going on the weekly basis. So yeah, 140 is probably the number going on Luna above these recent highs. Couple more days, couple more points, this thing's gone.
Yeah, it's just wild, man, with the Bitcoin weakness, what it's doing. Just can you imagine if Bitcoin's like definitely solidified and confirmed the long-term uptrend is going to continue, what Luna would do? I can't imagine it because like it's just so choppy on Bitcoin. Like you keep making these higher lows. You just nonstop higher lows since you bottomed out in late January, and Luna's hitting all-time highs while Bitcoin's still about 45% off its all-time high. Crazy.
You do have some really big patterns on metaverse plays. Here's Rune, which is definitely trying to get off this extended base with massive bat pattern at the 886. Um, that's I'm okay with something like that where you Rune on a daily basis just completed
Rune.
30 days ago, a little bit more than that. Let me see.
Oh yeah, Rune, dude, come on. Yeah, man. What a like a 100% shark, pretty
Mm-hmm.
much. And then the type 2 and the bullish divergence on the type 2 and then it actually took off and sold off and yesterday bullish engulfing candle confirmed. And yeah, man, like what the like it broke the supply line too. If you anchor from November 3rd's top just down, like it broke, dude, it's done like everything.
Yeah, those
Everything.
that's good constructive signs of possibilities. Stabilization, money flow back into some major plays. Go to Sand as the other one, Sandbox, coming back for this is a perfect type 2 on the bat, and that XA level's at 277. So that sets up possibility for some kind of strong individual breakout move would get this going for larger targets. So that's I still say with Bitcoin, all I want to see is Bitcoin grind higher. It doesn't have to have fireworks for
Yeah,
other
really.
markets like this to at least get off the floor and give you sizable moves.
On your the pattern completion zone of your bat there, it's another one. It's another shark. Like a mini shark right there. If you anchor, it's literally perfect. But it is below its 200-day moving average now for the first time since good God, July last year. Yeah, just like and it's not really at a formal support either, just at the PCZ. Um it stands like in a huge falling wedge pattern, nearing that demand line, or I'm sorry, that supply line. And yeah, I don't know. I think it could probably go deeper if things get bad. These are like these meta plays were like kind of out of sync with the macro where they were like blasting off towards the end, right? Where Bitcoin was still losing its value a lot. They were pumping and these just have not gone as deep as the other ones that we've seen, like from their COVID crash lows or their July of 2021 lows anyway. Where I don't know. If you go from that low from June of 2021, you're not even at a 78% retrace yet. So, but there are
All
so
the way
many that
back here. Oh
are.
yeah, I see that.
Just like yeah, meta plays are just kind of it's a different sector of crypto, and they're just not the same. They're just yeah.
One of the reasons why this is a bat, it's pulling off of the November 21 low, and so symmetrically off of that, it works. I mean, you have all the metrics you need structurally for that to be a true harmonic level. Sometimes those harmonic levels do come in the middle of nowhere, and can be valid.
Hmm.
I still want to
Yep.
see other things occur there, but don't want to dismiss that. But you have patterns. I mean, it's not like I'm ready to just really trash this whole thing, because you have stuff like here's KNC. I pull that up because that's another
Man, that
one.
was a legendary rectangle range broke out so good.
Yeah, this was where'd it go? Oh, it's all the way back here. So last year got kicked off with a bat pattern, and I think this is even the weekly. Let me see which one this is. Weekly was another bat pattern, big 886 off of um, last year's low, the
Yeah.
2021, and now, which is something I'd like to see in a lot of these crypto, where they do the BAM breakout, and at least KNC has got this. You go to X to A, A to B, B points at a
Oh, what a
40,
trend, huh?
and you're now breaking out for that BAM breakout move. 886 is
Took
at four
forever,
bucks.
man. It's been
But
84 years since we've completed the pattern, right?
yeah, it took forever. I think, and that could be where we are with a lot of these if they just hold their head. Not all. It's actually fairly selective, but you separate those patterns. Things like Luna, okay, that we're setting up, took a longer time. KNC here is one that has taken a bit more time, but now flashing higher. I think this is still early stage, where even a check back to 230, 240
Yep, 230 for sure.
would be the retest before you go. But there's number of these situations that have set up, that maybe it's just they need more time, and it's you said it to me the other day of just being surprised that Bitcoin is holding up in the face of everything.
Yeah, I think that's so impressive. Even though I'm still like just look, I'm a very optimistic person above when you're at or above 42K. When you fall below 42K, even if you reject it as resistance with confirmation, I just don't feel as comfortable. It's pretty simple. It's about the levels, right? All about the levels. And we were at the level and now we're below it, pretty violently below it. Um, so, people be like, I'm changing, the way my outlook on Bitcoin, but welcome to the market conditions we're in, where it's that like every day, when you're at this critical level, when it's testing it, failing it, testing it, breaking it. I mean, yeah, I'm gonna change. Like I'm gonna change when the new data presents itself. So I'm a little bit more cautious now when we're rejecting 42K.
I was ready to jump for on Bitcoin, at least for a check back to 45.5. As
Yep.
not as long. I mean, 24 hours ago, I thought, okay, great, exactly what we needed to see here. But
I
Ethereum,
figure a minor pullback because you had hidden bearish divergence kind of developing yesterday at 42K. So I figured anytime you show hidden bearish divergence at a major resistance, yeah, it makes sense after a 10% up day to pull back some, but to literally take out all of it, that wasn't really what we're looking for. Just, minor, but that was a little more major. So
yeah, and then Ethereum is not. Ethereum's starting to go the way of Cardano and just structurally drag out despite some nice patterns. Had kind of a Gartley back to back. You had a bat and then a Gartley here over the last month, 6 weeks on the 4 hour time frame.
I'm
Uh,
setting up for a deep crab. God.
Yeah, if this does not, I think it's pretty clear where this is scraping the lower end of the harmonic range, which is 2540, under 2500. I'd have a lot of concerns, and certainly these lows get taken out. I think that, then you'd have to just step aside. I've been looking for, at least, again, my whole strategy for last many months is for Bitcoin to do something. Doesn't have to do much, and then get altcoins to run. That hasn't worked too much. Luna,
Yeah.
a few others, but not across the board. And it seems like it's getting more selective. I'm getting more selective. I'm not doing nearly as much. So again, I feel like got to be patient. This stuff happens. The reactions, I think you can trade them, but they're not holds. They're just short trades, swing type trades, 4 or 5,
Yep.
maybe 6 days tops, and then that's it.
Yeah, it's like you can't like if you're talking about position trading, I mean it's like not an equitable market to be like position trading, like where you're holding something for a couple months, few months. But lately it's some of these altcoins have been setting up like those are it's getting to that point where you'd be able to do that. Um, where like you just go to Tezos like XTZ or Tron or H bar, like they're all at the levels where you could take a low risk long on the daily and hold it for a couple months, and it should be at higher prices based on everything it's done. All the retraces, the type twos, the diversions at supply or at supports, excuse me, inflection points. It's doing everything on significant time scales, 200 plus day large structures. Um, but yeah, Bitcoin and the macro it made it really tough, and they're not really catching the bids. Like I mean, Tesla's you're sitting there at $3. I mean, this is exactly. It's like anytime now, composite man. Like one of the bids coming in on this asset that has done everything but the impulse up. Loop ring too. It's like everything but the impulse up.
Yeah, let me see. I had loop ring. I'm gonna pull up a Tezos here. Yeah, and this is Tezos is even. It's got it. It's got everything there except for maybe it's a
Everything.
time. It's which is maybe this stuff needs to base for where bounces up and down for a while. That's a beauty. It's right at Tezos is just parking itself at the last swing 886, which is fairly common. Um, but maybe what you need to do is just simply spend 6 months going sideways and hit this 886 on the daily, weekly a few times over the course of 6 months, and then start something else later. It's not you don't see any kind of reactive move to even get this thing going. Let me look at this downtrend. Yeah, and you're still under that downtrend from the last 6 months, 7 months, and it's dragging out. This is a lot of the corrections, depending on your market, either started September, October, some peaked out November, December, and have done full 886s and now seem to be dragging, going sideways more.
Yeah,
Uh,
where like before, like in June and July, identical structure, right? I'm talking the same pattern back then. It did the type two, really did type three almost, but really type two, July 18th or whatever, when it bottomed out 20th. And then it went. It was like it did what it does, right? Like it's just not doing that now. It's just sitting there and may never take off. God.
it seems to be taking more of the shape of, if we go to total crypto, it's probably a good one to look at. Uh,
Yeah.
Getting into that 2018 extended corrective type of scene. Oh yeah. And we do have a nice pattern on total crypto. I've been talking about this for a long time. We got another, this has dragged out, but secondary retest. We did get confirmation yesterday. Really nice 3 bar breakout, strong close, right back in its face. So that's why
Yep.
continuation is so critical. I'd have to stretch this out that even against that pattern, you have to take out this little mini downtrend which is if you see a bearish reversal and this thing slides under 1.7 trillion over the next 2 3 days, you're going to go down. You're going to have to take more time, and you're going to retest this um, certainly over the next, I think, into the end of the
1.5.
month. 1.53 is the XA level off of that,
Mm-hmm.
what it's triggered off of. Just not surprising given the environment, not surprising with
Yeah, right. Yep.
everything going on. I just think people associated crypto so much with inflation, and then you start popping numbers like we popped today. Another beautiful.
7.9%, by the way, chat, if you don't know. And that was the highest. I mean, if you, it was the highest just like last month or whatever. It was 6% last year, 6.4% last year, and now it's 7.9%. So, yeah, highest inflation since World War II.
Yeah, and the war hasn't started, so um,
The
you know
third one, yeah,
we
good
really,
timing.
again, that's just going to drag on money asset allocation. You're not going to get. People might still DCA and continue to put money into this, and Michael Saylor will still borrow more money to buy more Bitcoin. Um,
Yep.
again, what's the price? What needs to happen for the consolidation grind to be over, to where you're putting positions in that yield positive moves, not chop, not aggressive up and down moves that don't really go anyplace. Which were there. We need to get into that larger phase, which I think is some kind of W breakout. Give me a low. There's XA. B, give me a secondary low, and then something that you can get going. Get above a B point, where then okay, at least you have a confirmed secondary low, and uh, get an acceleration higher back to retest some levels. Until that happens, until we can connect dots that give us that type of formation, we're going to be grinding. We're going to be a lot of chop that um, still has, I think, lower levels. It still has more work to do, as they say, and it's pretty clear. 40.
See, my argument is that my argument on Bitcoin is that you've done these things. You have made the M shape, and it started June 21st, and it completed the pattern January 22nd for the reaction. You reacted at the 886 literally to the dollar, and then you peaked out at 45K. Then you sold off, and you made your second test, $34,300, February 24th. You held above the 3-day 200 moving average. You rallied back above, and then that was it. It's like, wow, you go up again, the third time, test that 44.4, and then you sell off, and here we are below 40 and 42K, and it's just like, what the F, man? Like, I feel like I'm taking crazy pills because if you go to like I think it was the ruble to the US dollar, it was the same type of I'm sorry, Bitcoin to the ruble. If you go to that chart, it did what like Ethereum did. It made the cipher. It hit the 786 and literally blasted off from there at the PCZ after a Type 2 return. It's crazy. You just go to
Huh.
BTC to RUB on Binance, and you can see it. It was the cipher. Everything was there. The hidden bullish divergence in the end kind of played out. You stayed above the 200-day, 3-day, or the 203-day moving average. Um, it's just like I feel like I'm going crazy here because
Yeah,
it played out on the ruble, but it didn't play out on the US dollar.
there's the chart on the daily for Binance. That's BTC RUB.
Yeah, I'm just gonna
On the daily, showing a
GMT.
uh, beautiful crab at the moment. Hop at 50. What is that? Oh, sorry. Oh no, that's 5 million rubles to the Bitcoin. That's amazing. But it did do the breakout that you're uh, describing, and this is, yeah, taking that crab shape where you get the low, secondary low, and then once it breaks above that B point with the other 4 points established, then definitely the some kind of acceleration, which you got straight up to the hop level and the prior peak, November peak, is a minimum kind of reaction I would love to see, but just not materializing yet. I don't know. This is what I'm looking for. I agree with you, Mitch. This is the kind of move on Bitcoin, Bitcoin USD, BTC USD, not BTC
Hmm.
RUB, but that is the kind of move where some strong reactive confirmed secondary low gets you out of this hole. So
Yeah,
again,
so it's like everything has happened except the bullish impulse. Like the stage is set for more upside on Bitcoin, but it's just being suppressed. It can't break 42K. Just like, you know, it's tough, man. Like going live and you know where the critical levels are. You're breaking them. You're rejecting them. You're breaking them. You're rejecting them. Like for the past, I mean, since kind of the beginning of the effing year when we fell below it initially, January 19th, it's just been so tough forecasting. But in the grand scheme of things, it's set up for higher prices right now. But maybe there's just not going to be the bids. The bids just don't come in, and the macro is too bearish. I mean, I think that the index funds are in a downtrend, and that will take a tremendous amount of work to reverse. So with them being bearish, it's tough on Bitcoin being a risk-on asset. It's just
I don't think your
underperforming,
range
I
has
guess.
ever been tighter. I think your kind of your resolution range of getting squeezed into a tighter and tighter zone for Bitcoin has is probably the tightest I've seen it really since the 2020 breakout because that got squeezed. Go to the weekly here. It's we go all the way back to this kind of a thing in the face of the pattern where not only it was at 2019 where longer term uptrend was coming up and squeezing you into that zone. You had a nice move, and then again, here's where the larger retest and right down into there and long term uptrend came in, supported it with some patterns banging against that trend line. So same deal. You're trying to do it up here. It's just at a higher level of support. Looks like this, and I don't know. It's still. You would think if it was going to fall apart after everything, it would have already done it.
Yeah.
It's again, well, I'll defend that until it doesn't happen. And meaning a violation under the lows, the trend line. My fear is it's some big candle. I think we know what'll happen. It'll be complete full reset. But until that, I'll
Yeah, you got
stick.
to break 30K, yeah.
Yeah, I'll stay firm here and just say, okay, it's a situation where it's going to take more time. Just look for the triggers, maybe smaller time frame setups where you can trade reactions and then maybe they explode into some kind of larger move. But where's what was the other?
Sometimes you got to go with like the 60 minute. Like that's what I had to resort to on Bitcoin a couple of days ago. It was like, oh, excuse me, sorry. You had like the quadruple bullish divergence. You had multiple time scales showing an edge at a support, and it's just like, okay, like take a shot, and if you get stopped out, whatever. But it played out in 48 hours, hit two of the three targets, and it's already close to the entry again, like back to it. So it's like trader's market right now because you're not going to make yield because it's not holding on. Like the pops are getting faded, the rips are getting faded. So yeah,
Here's
that's all
so
you can do. And
yeah. I mean, here's Solana doing that very thing. Perfect
mhm.
pattern, bad pattern off the September swing, and great confirmation. We had another one. I was been talking about this where 88 is the big 886 XA, and look at the zone. Breaking up the zone here. You can see where the triggers come in. That's the green arrow.
God, that distribution though, it's just constant distribution with a freaking buy wall. So weak. Like Solana. I mean,
And no follow through. Yeah, absolutely. You get good stabilization, you get your trigger. Here is the terminal bar. That tells you the starting point for the pattern, and then the green arrow goes on. Okay, that's trigger time at XA at around 88, and you get a nice move, but no follow through. You run into a bearish HSI arrow. That's always not what you want to see. I mean, you want to see if this is really going to be a strong pattern. It will, reverse,
I
stabilize,
wouldn't
reverse, and explode.
I wouldn't touch this thing till $48, $50, because I think it's the full reset. I think you broke your bad action magnet move already, and you're on your way to $48, and that's an 88% retrace, and it's at support. So there's confluence there. It makes way more sense to go down to that, and it's just one where I would just why settle on this one? Think about it like this. And I've been doing this with a lot of them. You just go to the January 24th low. I guess January 22nd for Sol on this one. It's the 24th because I'm looking at 3 day. But what percentage has it appreciated in value since January 24th on Sol? How much is it up since January 24th
I
low,
mean,
like the stock market?
it's up 50% off the low. I mean, that's it. Did that
Wait,
is
wait, wait. From the right now, I think it's literally. Hold on.
Oh, you mean the full retracement?
Just from January
Oh,
24th. That is like the low. The stock market dumped in Bitcoin. They were all correlated together, and there's a huge reaction. And that huge reactionary day has changed the course of a lot of things. The outperformance, like the S&P is lower than it was January 24th, I believe. Or yeah, it is. And Bitcoin is up still. Let's see. Bitcoin is up from that January 24th low right now. 18%. It's up 18%, right? S&P's down. Sol is what? From that low. It's down. It's at the
that's
same price or lower.
yeah.
So you can like that right there. That's when I think that's a good way to decide on like you have a finite amount of capital and you can put it anywhere. So why would one want to put it in such a massively underperforming asset, right? Compared to a level where we know it was a big day on the markets and things have changed since then. I mean, I would rather put my money in Bitcoin over Solana right now, just based on sheer performance for the past 6 weeks.
I agree with that. Again, you're not able to really be confident with the speculative moves. I thought we would see more Luna style
Yep.
reactions, explosions, but that's not been the case. That was again, that has been my strategy all year, but it's not panning out nearly as well as I thought it would. And then yeah, Solana is a great pattern that had a nice strong reaction. It bottomed out at 81, and then just in that quick 2 week bounce went from 81 to 121. That's a heck of a move. As a tradable move, that's a 50% move. That's huge. Doesn't look like much on the total chart, but enough where if it rolls over after doing a 50% move in 2 weeks, you're not surprised now comes back for that full retest. I would have to see some kind of trigger down here, and you're threatening to make new lows for the month and last few
Oh
weeks.
yeah.
So yeah, maybe 40 if it doesn't, if it gets real ugly. I'm not,
Oh, I hate Sol, and I've hated Sol for a long time. It was decoupled from Bitcoin because it had to go on that crazy run, and then it had the buying climax, and it's just been terrible. It reminds me of Cardano a lot. Like I think Cardano will probably see 40 cents eventually. It's just terrible. It's just like you're below all these levels. You're showing divergence. Divergence is literally doing nothing. You're you're lower than you were, right? Think about that. Bitcoin's up 18% from its January 24th low, and Cardano is down 15% from that same low. Terrible. Like, how could anyone ever want to own Cardano just knowing that, right?
I agree. Cardano's been weak. We've talked about
Yeah.
it, how weak it's been, and as kind of the poster child for what might happen if these fall apart.
Mm-hmm.
And if Cardano can't do anything, if it can't get off the floor here,
You got a
and
crab.
yeah, I mean, the bat pattern that we were looking at was 121, and that failed. I mean, that was just a joke.
Yep. Violated, invalidated. That's how you know, right? I mean, those are when your trend's that bad, when your patterns get violated like that. It's just like the Nasdaq after the tech bubble popped, right? Just at the PCZ.
That's the yeah. I mean, that's the concern with the crypto for sure, because the crypto is at a point where the natural dynamic of how this works out has to go to 886s. Let me try. I'm trying to fix the.
And they do all the time, and oftentimes they react and they reverse there, but not now. Because remember, we were talking about at the beginning of the stream, things have changed, right? Something in the water, something in the air. It's not the same.
No, it's again. That's where you'll go back and look at that in history and say, okay, Cardano went from 10 cents to $3. Go. That's the coin. It came on Coinbase. It was $1, but a better exchange would be like Binance. Even all right, yeah. There's the Binance feed. So that's actually it's a better reflection of what the all-time data is. There's Cardano. Um, All-time 886 on Cardano is 40 cents. Is 40 cents? It's
Yep.
yeah,
Nothing makes sense
38.
technically until 40 cents. Nothing. Like, there's no formal support looking left. You've just regarded what was once a steel wall of resistance. Probably the most powerful support resistance ever made on Cardano at $1 is now confirmed resistance. And you're rolling over. And you're trying to bearishly engulf today. I mean, I could see that happening. And it's just think about like when Bitcoin popped, it was up 10% yesterday. Cardano did nothing. It's just
Looks like
yeah, this is like this one's kind of like your bet if like you're bearish. Like cuz we don't know, right? I mean, Bitcoin could roll over, we go to 25K eventually. This is one of your bets. It's an outperformer in a downtrend, right? As a bearish asset, it's outperforming Bitcoin. So it's like this one would probably outperform on the way down. If Bitcoin was going to roll over, this would probably be one to be shorting
yeah,
because it's going to get wrecked and there's no support. So it's
yeah.
just, yeah,
I'm not trading futures on crypto at all. Just the spot, and that was
speaking of futures,
fine for me.
yeah. Wait, what?
We dumping.
Kinda. It's hidden bearish divergence still playing out. Yeah, you're near your lows of the day. Hidden bearish divergence on the 4 hour on Nasdaq futures, while spot price on gold on the 4 hour showing hidden bullish divergence as it's already bottoming out and getting ready to run to test all-time highs again. Easy.
Yeah,
Silver gonna be go testing the highs of the rally soon. This is what was I talked about on my stream yesterday. It's like, yeah, you're gonna have down days because the risk on assets are gonna catch pathetic little rallies. That happened. So they're inverse correlated. But just remember, what's the prevailing trend of these two markets? Commodities bullish, consecutive higher highs, higher lows. Now we have equities markets that are making consecutive lower highs, lower lows. So just because you have a pop day, remember it's probably going to get faded and you're going to roll over after making a lower high and make a lower low eventually. While, again, the risk off assets like gold, silver, platinum, wheat, all those are going to just pivot, making higher lows and run again to their higher highs. And they're going to outperform. They're going to do wonderful. So, and like oil right now is actually dumping at its lows of the day at 106.85 and falling.
hmm.
That's interesting to see gold and silver of metals do well and oil's just actually dumping literally as I'm talking to you right now. Hmm.
I see that. Yeah, but what's well? This is again. We have the big numbers up here on the 886 number. That's just the reaction number. And that's all we're doing. Is this a reaction off the 886 all-time 886 at 125? I'm not surprised to see this thing at least give some back. You have to remember it has nearly doubled since October. In
Yeah.
fact, it did double. Sorry, it doubled off of the low is $63, and then we went
Yep.
to 130. So what's a 382 off of that last
So
move?
crazy.
Even a minimum 382 pullback, which wouldn't be too much. It's 105, and you're there. You're actually already kissed it. You're already that would be a good number. Keep eye on for crude oil, light sweet crude at 104 and change. Larger kind of perspective, crude oil should not go back under $100 anytime soon. Maybe we pull back and kiss 100. but I don't think anyone's surprised that this is doing a little pullback from a harmonic perspective. That 886. I said this too, where we could get like the 886 could be a B point, a future B point. One way to think about this, maybe some kind of a B point off of the all-time swing, and then you do a thrust higher because the all-time 886, sorry, the all-time 1618 on crude oil is up at 250. And I'm not going to
Jeez.
jump there until we resolve it, until we resolve this 886. But there's nothing for me until much higher prices. Let me go to the monthly. It's going to be easier to show it.
I look at oil, like technically, and anything below 110, you could see 86 for the next like strong support, and that'd be like back testing the October 28th high. You could pull back maybe there, but yeah, I get it. It's like it's different, it's deeper, stronger than like just oh, it's just the technicals. No, we have like a serious, we're taking out an economy from the world, right? I mean, that can have like a greater effect on something that's just technical. So, but yeah, I mean, just looking left, it's hard to see much support below 110 until like 86. It, kind of 97 has a $97 kind of something, but yeah, it's
Yeah,
just we have
if
a
we had some kind of a 382 pullback off of or even a 236 is about 90, but I don't see that because of uh, I go to the longer term individual price action on say the quarterly or monthly. You're not gonna you can't even make that assessment until the end of the month, and it's in a good way it's good because
yeah,
the end of the month, end of the quarter is going to come in 2 weeks. So we'll have a really good idea of what this candle
true.
will look like. But geez, it's only the 10th. There's 20 days of more geopolitical craziness like we've
Hmm.
had. Just let's look at the last 20 days of where crude oil's been. Think about, okay, folks, what did you pay a month ago at the pump for fill up
Yeah,
your
it's
car?
doubled. It's legit doubled, like in price for like everyone, pretty much.
So that's again this kind of stuff in light of the fact that we have these kind of extraordinary situations. I do want to just wait, be patient on the end of the month, see how this shapes up. But again, daily close. This is your 886 is right there. That was the all-time 886 retracement. So quick throwdown move, no problem, fill the gap at 103, 104. But I don't think the prior low, that one single candle, I doubt that gets taken out much. If this is going to be just a brief reaction in crude oil, you'll come back, retest it, and then start to go again. Where again, I say the all-time high on continuous contracts 147. You probably go there um, sooner than later, and I mean sooner by within the next 6 weeks on this run. Just too much going on, and the thing is, you haven't changed the dynamics. You haven't done anything to change supply demand dynamics, and some of the other stuff of like you have to go to Venezuela or you're gonna have to go to reliable people like Iran to get the capacity. That these are all pressures on the market that aren't going away anytime soon. Even if they are able to resolve it, it's we have a lot of this kind of pent up inflation that's going to take months to resolve, and we're seeing it in the
Ugh,
chart. We're seeing it in the charts.
so bad, man. It's like inflation's getting so exacerbated by all this. It was already bad, but now it's exacerbated because of the war, and all the index funds are correcting. So I mean that, and it could be long extended. Who knows how long it'll last until you make a higher high and a higher low after. You're in a downtrend on these index funds. So I mean, those are terrible market conditions just for the normal person who works a 9 to 5. I've touched on it before, but it's just devastating. I mean, it's so bad. Like your purchasing power every day is getting obliterated. Yeah, we're writing checks. 14 billion, for Ukraine. Okay, it's like here and there, billions here, trillions there. You're just printing money irresponsibly, no accountability, which is continuing to drive inflation higher. It's so bad. These market conditions, stagflation, right? I mean,
The,
this is like textbook stagflation stuff, right?
this
With some
is
crazy.
this is the thing that people always were worried about, and the fact that the lack of recognition on it for me is quite scary because how much further are they going to take this before they change the policy that they really need to fix to unhinge the dynamics? I mean, this is, again, I've been talking about a general malaise that has really, it's really come on the market in the last 3 4 months. And I think with the crude oil market, the fact that this has been accelerated, in my opinion. Crude oil is something I felt like the dynamics changed a year ago when a lot of the restrictions were put on U.S. production.
Hmm.
And I've been openly talking about that for more than a year. It's one of the reasons why we were playing natural gas at 240 before it ran to 6.
NG was awesome.
So again, that's only the first wave, and same with crude oil here. I'm surprised it has run so far. In my opinion, if that was the first wave for crude oil, the next wave is going to be longer than the prior one. The
Yeah,
first.
people won't believe it. I remember talking about it. Like, I think even we talked about it. Like, we're just like, oh yeah, I mean, like, probably just gonna do something psycho crazy that's never been done before. Well, yeah, we're in the conditions now. This is before the invasion, by the way. And it's just like, with that on the table, with that going on, oh yeah, like, what will we not see? I mean, even they, like the Kremlin, like threatened $200 a barrel.
Yep.
Do you think that's possible? $200 a barrel for oil?
I
That
th-
make like prices like $7, $8 per gallon,
no,
something like
they're
that.
going to be. There'll be much more than that. I do think.
God.
I'll get somebody wanted to bring up Blink. I'll come up to Blink in some of those solar alternative stocks. It should be looked at here in a second, but um,
Oh, Sunrun and power,
yeah, here's the
s-
thing
solar.
with crude oil all-time chart on the go to the quarterly chart and just do your retracement spreads. And I go back to say the breakout from. I really feel like this is similar to the breakout during the Iraq War. So let me first do how we get to
Well, that's not
this.
good then.
Yeah, but we have historic precedent.
Yeah.
And if we're going to do our spreads, so in a way, it's kind of good that we got rejected off the 886. It tells me that the levels are, they're firing. And go bring up the. So let's look at 1618. Because if the 886 at 125 put the brakes on a massive rally just for now to give us a sizable reaction, then the next set of spread levels that I want to consider, 1618, 113, just running up the scale, I will certainly want to pay close attention to. So 263, look at it this way. Here is the all-time high, 147. Now we have to do it negative, and I don't get into the won't get into the futures fiasco of going negative, but we still want to measure it the same way. We can do this with other contract months that like June or December 22 that didn't. But for the continuous, I again the definition of an extreme overbought move looks like something like that, where you go to there you go. You
There's your
could
shark
it,
almost, right? You could visualize.
you do have a shark off of this last down move, sure. Like this.
Like X being 2000 or zero, whatever.
Yeah, zero being '08. Here's 0x. Zero at
Oh
zero,
yeah. Oh wait, my bad. Oh wait,
yeah, like
sorry.
that, and then
Okay.
down, and you could have a couple things, um, around the 113 at 170. I feel real confident in the way that this is breaking out off of these lows. That this continues. It pauses at an 886, but by definition, structurally, 113 at 170, not a stretch. And again, I would be looking more for this 1618 move up to 261. I know that's
Jesus, dude.
crazy, but
Dude, that's like we're in a recession at that point. Dude, I don't people like I don't know. Am I off base to think that like if you have like oil prices really high for a long time, that it would like just like it like slowly kills the economy, especially with raising rates, the environment, right? Right? That's like hawkish. Or just think about like the fuel, like people travel, leisure. I mean, that's like the blood of an economy, right? Is the oil. And if it's doing stuff like that, I just how's that not recessionary behavior?
it is. Although you can get away with it for a little while. I don't know how much
It's like
longer.
like higher rates for a little while, but if they just keep going up, and the price of oil just sustains these prices and beyond. It's gonna affect the economy negatively. Like I think about logistics and all the truckers, all the transportation and the ships, right? Across the ocean require oil. I mean, I feel like that going against every company's bottom line is just gonna really hurt the economy. I don't know, long term, midterm.
Well, think of it this way, and this is the kind of my comparison for crude oil. I actually really I spent a lot of time from basically these years, 97, early 2000s, hanging with a good friend of mine who was, he owned a seat on the floor of the exchange. He was the largest independent natural gas trader on the floor. Did a lot of interesting things there and learned a lot about floor trading, before it all went away. But we were talking about all of this, the depression, the bear market in crude oil, and then it started to resurge into the late 90s. And then, of course, 9/11 and Iraq war hit,
Hmm.
where the all-time highs across the board were about $40. And let me blow this up so we can get a good look. And I just remember everyone talking about, oh, will it ever break above 40 again? 40 is such a huge number that
Hmm.
once it started to get out of the this massive commodity deflation cycle throughout the 90s and started to come back up, once we busted through the 886 all time, or even the prior high like that, okay, when we really started to take off. And I remember looking, okay, what's the possibilities here? Well, maybe this goes and it goes to new highs and does a 1618 move off of the 90s, the 1991 to 1997,
Hmm.
98 deflationary cycle, and we were looking at that around $61. But then the thing just started to climb and climb and climb, and um,
Parabolic, yeah.
went parabolic to a 314. Okay, so I
God.
I want people to realize that this kind of measurement scale, it repeats long term. It repeats the same way all time frames. And if we're going to do it on the current range,
247, you said.
yeah, which okay, 1618 was a minimum that I was targeting on that Iraq war breakout way back when. And natural gas went to $15, and I think that could happen again. But let's just say it goes crazy on a harmonic scale. And I don't want to, I'm not trying to gas the whole conversation here. I just want to lay the framework of ratios of how we should be looking at this in any situation, every time frame, any market. We lay down the framework of ratios. And if our all-time breakout on the current move is at the 1618 extensions at 261, if it went parabolic, by definition, it's at 547, 546.
Give some context on how much time it took for this to play out, right? That's what a lot of people maybe it'd be in their best interest to know that it just like this wasn't just like, oh, it happened, man, like over the course of like a couple months. Nah, dude, this
Now,
was like forever. It took so long.
I remember,
Cycle.
yeah, I remember the exact day actually when this started, and it was 9/11. Although everyone and their brother thought, okay, George Bush Jr., not a fan. George Bush Jr. when he got in, okay, it was one of
Dude,
those.
Enron, man. Enron's gonna take over the world, dude.
Well, the major conglomerate oils were definitely the play, and a lot of people are
Yo.
like, just don't complicate it. Just go in on ExxonMobil and Chevron and Texaco and all the other ones that were still there. But that was here, okay. George Bush gets in there. You know the guy's super pro oil, and then 9/11 hits. You had a reaction, but 9/11, once that hit, they knew it was going to put pressure on oil. But you know that that's coming, and that geopolitical conflict, which was brand new, was going to end the deflationary cycle, had already hit, and it still took 2 3 years of where the obvious was unfolding, and then it just blasted. And then once it blasted, again, it was about an 18 to 24 month cycle, which I think we're almost there now, where when we get above, say, the prior all time high, like we get above 150, 155, then that would start say the
Hmm.
12 to 24 month cycle
Price
where,
discovery.
yeah, going to price discovery, pretty crazy stuff. I don't think you would stay there for years and years, but you could spend, you could do 2 years of a crazy parabolic move and
Well,
crash
oil's
back
like
down.
8 years, right? Oil's like, I mean, maybe 2001 or whatever. Yeah, 2000 is kind of when it began to go and like it broke out what 2002 or three
Yeah,
broke that
oh
previous
two oh
high.
three. Yeah, was really where you started to
So you had
threaten it.
years of it. You had years where you could sit in oil and you did well, like just holding it, right?
Yeah, and that's where I think we are now. I
And during
do.
that time, it wasn't too great for equities. I don't know. Equities recovered eventually and then started running again, but they double topped, right? I mean, they never took out the 2000 highs, right? It was just again a massive double top, and you went all the way back down. I think in '08 you fell below your 2000 lows, right, on the Nasdaq maybe.
You did. You went all the way. You
So
went to
bad.
new lows. You went all the way back down. Nasdaq was, it wasn't as bad as say S&P or Dow.
Yeah,
But
it made a higher low, an 88% retrace actually from the 2002 low to the 2007 high. I think the Nasdaq had an 88% retrace, and that's exactly where it reversed. And my God, dude, I didn't even notice this before. It double bottomed. It type 2 returned at the 886.
yeah,
That's insane. That's
but
crazy, dude.
yeah, there was really. Let me
What a sharp.
bring up the IXIC, the index, not the Qs. And it's a good chart to look at because there's a lot of. Oh, let me go and Nasdaq. A lot of similarities where we are now. I'm thinking that if this stuff, if we run into more problems, oil does become that severe issue, which it's on the verge of. It will
Hmm.
still take a bit of time before that materializes, but it's kind of like this. If we're looking at Nasdaq, and let's say, okay, here's Nasdaq 100 index. So the big thing that drove those Nasdaq stocks wasn't necessarily all the dot coms, although that really was the main driver for the 90s. But you had this Y2K thing. Is there was the real
Hmm.
reason, and it drove. They surged a ton of liquidity into the market to solve this problem once they realized it, and that was late '98. And this reminds me a lot of kind of the COVID move where you did this big surge, and then you don't it ended in a kind of a big nothing on Y2K. What a joke. But the liquidity dried up. Interest rate
Yeah, yeah.
interest rates started to go back up, and again, that was the end of the cycle. And I think if we're going to think of it the same way as this Nasdaq situation, the end of the cycle for how that rally was launched is here. I mean, it's pretty clear, and that is going to show up in the charts. Well, we'll see it again. We need to do a big 382 retracement. We're not fully there yet, but that's the first stop before the larger kind of acceleration takes hold. And that's normally how it goes, where your first move to a 382 will take a little bit of time, but then once you break 382.50 levels, that's where the bigger acceleration will happen. That's why this stuff might even seem obvious, like okay, we're in a real dangerous time for the markets, but the larger expression of that is not gonna it's not gonna just happen overnight. This could be something where Nasdaq takes many months and then starts to
Hmm.
roll over much later in the year.
Yep, for
And
sure. Oh, fun fact about Y2K. Um, if you didn't know, December 31st, 1999, who was sworn in as like president of their country? Do you know?
of who was sworn in on?
Vladimir Putin.
Oh yeah,
Yeah, the last day of the old millennium. Interesting. I learned that a couple of days ago. Weird. Just
yeah.
kind
I
of.
don't know. Oliver Stone's got a good documentary of what was going on in Ukraine leading up to before Zelensky, but really with what went down
I think
there.
Ukraine on fire or something.
Yeah, I thought it was pretty good. It doesn't excuse what's
People
happening.
were saying it was like Russian propaganda or something.
No, because the
And it
guy
got taken off like YouTube or something.
it got taken off, but he made this like 2 years ago. So,
Yeah.
and again, I think even if you feel that way, you still have to have an open mind and give it a look. And there was certainly things that were done that, again, doesn't warrant what's happening now. But this whole situation is deep, and it's not going to get
It
solved
is.
overnight. It's not going to get solved even in a month. And this is, I've been saying that this is a new time where we have to take into some consideration these geopolitical pressures. We're not dealing with the same environment we have been for the last few years. We're going to have strains and changes. That's probably a better way to think about it. It's not going to be smooth sailing. And that's why I think crypto as well is kind of experiencing that, where you have extreme uncertainty, probably the most uncertainty in
Yep.
Bitcoin's existence.
I would say the most uncertain market of all markets, right? Where you have, I think, a clearly defined downtrend on the index funds, the equities market, and I think you have a very well defined, clear uptrend in commodities. And Bitcoin, crypto, we're in purgatory. Like you've done everything, the stage is set for higher prices, but no one's buying, or not enough people are buying to where we are actually separating from that type 2 return of the big M shape that's been in development 200 plus days. Yeah, I think that's in my opinion, I think it's the most uncertain market right now.
Yeah, it's absolutely insane. Where's the where's wheat? There you go, wheat futures, CW.
Wheat started round again today too, I think.
Look at this. Here's wheat. Okay, again, all your commodities, your ag commodities,
Ooh, got it.
do
Didn't. It was rallying, and never mind, it started rolling over. Okay.
do look at your all-time charts on all of this. Again, you have to go back to the 70s. And nice that TradingView has these charts
Yep.
where you're not doing you're doing kind of this type of move where you've broken out. Uh, that was the early 70s, 74 devaluation movement, and again, all of these did. You're going to look at these if you can blow up that range. They all did 314 moves minimum, folks. A 314 is definition parabolic move. Here's another kind of range, multi-decade consolidation continuation And once you crack that range, okay, you go much higher. This was another one where, all right, maybe you could say, oh, maybe some kind of super long-term deep crab at a 1618. But you're looking at the 1618, and when it gets there, it just blows through to a 314. Look at that. 314 was exact right at the top there at the '06 peak. And then, so here we are again. Now we're back up there on a first thrust. What are we going to do? Are we going to come off this 886 and pause here? And what's the eventual 1618? I mean, eventual 1618 for wheat is 20, but what if it goes to a 314? Because we've seen this over and over
Come on, it
again.
goes back to the 2008 high.
What if it does? And this is the crazy scenario for all commodities that
Type 2.
1618 minimum or 314, and then just calculate that 314. Where 314 puts you at around 32 a bushel,
Oh my God,
which
dude.
is triple from here.
That would be like so bad. I mean, that would be terrible. There'd be like death and famine, like, right? I mean, that's
Well, here's the thing, okay? And wheat's interesting because look at every spike. And I just clean it up and look at it this way. Uh, and it does correspond with recessions. 2008 spike,
yep.
okay, 98 spike, 98, 97 spike, 89. And these don't, these seem like nothing now. These were huge moves back then.
Oh yeah.
And so we go into price discovery above 14, 16. That's dangerous. That's where you really see the effects of the money printer. And I think we've all kind of joked about money printer goes
Yep.
burr for a long time. And again, I think it's getting serious that
Yep.
from an investment perspective, if equities can't stabilize, we do go into a recession, they're going to get hit. So I'm super cautious. I'm staying with my energy long positions. A lot of you know what that they are for me. Let me see here. Nasdaq's off 320 and starting to roll over.
Hal killing it again today. Let's go.
S&P is down 53, not so bad, and no, actually only down 280. Dow's down 350.
A
So
little off its nose, yeah.
yeah, again, I think we just have to hold on and see how we finish up tomorrow and into the end of the month because of all of the daily patterns. Here's one last. I'm going to wrap up with these here: Nasdaq and S&P. That from a harmonic perspective, folks, the best thing that this could do, a Nasdaq could do, would be to come down and complete this crab pattern at 12,885. That's the 1618 off of the October low, and that would be the definition of structurally oversold. Um, this is not doing anything really constructive, even though we're in the zone, kind of dancing around. These individual candles are not. I mean, no follow through from yesterday, and we're right back down. So take out yesterday's low, this will flush, and
Oh
that.
yeah, dude. It'll be a bad day. Yep.
So we got what? It's 1:30. We've been here for 2 hours. Appreciate you coming in today, Mitch.
Have
And
we?
wrap it up. But it's again
Dang.
3 hours of left in today's session. Market's already down 300 and change. Again, this stuff could go into. Let's look at the 5 minute. Yeah, I mean this could sell off pretty hard into the close. And just for people who are futures traders, I always like to throw out some levels for people trading the futures. Target 13.3, 13.290 for today. If we start to blow through these lows again, so we get in the next hour or two, and we start taking out new lows for the session, we got nothing until another 170 lower. And Tuesday, I finished the session where we were up, and I said, don't be surprised to see this thing roll over again. and it dropped hundreds of points. We were here, there it was on Tuesday. We were up here, and the thing just tanked.
Oh, it was so bearish, man. It was testing that supply line of the downtrend. Lower highs. Yeah, this thing is so bearish. Like the Nasdaq, I mean, yeah, the S&P at least attempted to break some levels. Nasdaq's terrible. So was like the Russell 2000. I mean, they were like, hey, setting up potentially to a double bottom, but when you're in a downtrend, a double bottom is like quite possibly going to fail. Like, I mean, it's just you want to see accumulation. A double bottom is certainly not accumulation. I mean, maybe it'll be a higher low double bottom, but not on the case of the Russell 2000 was like the same low, and that's just not good enough. Those things, those potential double bottoms and downtrends are not going to be as reliable, and even if they are reliable, they can start playing out, and then they'll just underperform and they'll just roll over again later.
Yeah, and we're
Yeah,
gonna if we
and
clear out these lows now, again, that's the only thing I'm really concerned with between now and the end of the month is if we find ourselves under these critical levels or like S&P and the Dow both have shark patterns currently, and S&P looks ugly in this type 2 shark that has support at 4110, but that's last ditch. And I think a couple more days, and
yeah,
we
leave
find,
all that. It's just
yeah, I mean, under a close under 4100, I forget about it. I would be extremely concerned. So,
yeah,
uh,
it should be quick 405 easy. I think that's the target anyway. 405 eventually in the SPY or whatever. But it's just crazy, man. You look at it and it's just I cannot believe that again today on the SPY, there's more like triple bullish divergence developing on the MACD histogram. But where are the bids? Where are the bids? They're not here yet. And you're below support resistance. 422, 426, that little zone there. Yeah, it's oh God, man.
the SPY is the same. Yeah, SPY
It's just all
4
hopium.
411. And again, beyond these patterns, you go to monthly or weekly charts, and we take out last month's low, the January low. This is where the COVID retracements come into play, and you go to 382. Is it 380 off of the COVID low? I again, this is for me. We saw it. I showed you a few charts of where, say, the acceleration happened in crude oil. Um, it takes time. I guess that's the way to really explain it. That this kind of bust and breakdown that's happening now, if we see that and then we get a clear violation, you're going to get. We're not even in acceleration phase, is what I'm trying to say. So I think I'm going to leave it there, Mitch. It's I'm going to get back to the afternoon for me and see if I can line up. I get a little rally going on. Now we're only down 295. Let's see how it shapes up. But appreciate the time, everybody. Mitch Ray, thank you for joining us. Go check out Mitch Ray tonight, and I'll jump on with you, Mitch. After you do your thing.
Yeah, for sure.
And
Thanks for having me. Always really fun. It's like 2 hours, you said. I'm like, what? 2 hours?
yeah,
Dang.
yeah, and we'll
We did
keep
this all
doing it.
day, man.
We'll keep doing it.
Yeah.
Yeah, stay on top of it. But a lot of interesting stuff. A lot of the big levels were hit. Now it's all about the follow through. Literally one more. Next week is we're coming to crunch time, and I think we're going to get those monthly and longer term signals to play out, and then we'll have to deal with some stuff in April. But we'll have you back again. I'll join you over at your thing after a little later, probably 6:30 or so, and again, thank you. And everybody, just want to give everyone a shout out. Go over to harmonictrader.com, please, and log in as a basic member and get with all of the materials we featured today, the software, and over here in the Discord. Join us there. That's where we have our groups of traders there sharing charts and everything. So, again, thanks, Mitch. I'll check with you in a few hours.
Sounds
And
good, man. Yeah.
you have a great
6
afternoon.
p.m. Eastern. Yeah, 6 p.m. Eastern. We'll be live again doing the same thing, just on my side, on my stream. So, and maybe we'll just do something like this next week. Come on yours.
Yeah, I think.
This is just fun, man. Just to have a good time doing it. And I know a lot of people really enjoy it. So, and I learn a lot. I mean, I think just picking your brain because you're a legend and you have
Wow.
a ton of experience and you've witnessed far more market cycles than me. So it's getting to learn. It's fun.
Appreciate it. Well, I can say that I've put the framework to test, and the framework's going to get tested again, folks. We're going to see how you're going to have to follow the numbers more than the craziness of the stories, but that's what we do, and that's what we're trying to really figure out the chart story based on the numbers and the patterns for where the market's headed. And right now, let's just hang tight. So thanks again, everybody. We'll catch you tomorrow. I'll be back on Monday at 11:30. Another Harmonic Pattern podcast, or catch me on the Discord if you have any questions. Until then, have a great weekend, folks. Go get them, and we'll catch you next week. Thanks, Mitch. Take care.
Later, y'all.